Hey everybody, this is Lars. You all know me, mostly from the blog, but now this night I will do this with my phone. It's a little bit odd. Normally, when I'm in front of a camera, somebody else is doing it. This time I'm trying with the phone. Um, it has been a little bit hectic recently for me. As you know, I have resigned from Danske Bank. I'm still with the bank for a bit of time, but soon I will be on my own. You have seen in my previous post what I will be doing. I will be doing public speaking, I will be doing consultancy, commentary, and probably also blog quite a bit more. And as part of that, maybe I'll try this out from time to time. As you know, I spend quite a bit of time on the road, traveling, meeting clients, speaking, and that's also what I will be doing in the future. So this is a little bit of a test. What you can hear in the background maybe are the birds singing here from Frederiksberg in Copenhagen. It's spring in Denmark, and it's quite nice. The kids are sleeping, and I thought I might just send this little message out and maybe reflect a little bit on what's going on in the markets. Frankly speaking, it has been very busy since I announced I would resign from Danske Bank. So I haven't had that much time to really think about what's going on in the market, but it has been wild in some of the key markets. We have seen bonds, German treasury bonds, selling off quite a bit. Interest rates are up, and the question is, why is this? Well, to be quite frank, I haven't really come to a conclusion. I think one thing is our old friend Chuck Norris is here. What I believe is the case is that we increasingly see investors pricing out the deflationary scenario, that Europe is not heading to a Japanese style 15 years of deflation. With ECB's actions of last year, we are beginning to move out of a situation of clear deflationary risk for the long run. So maybe that's one of the things. And this is basically what Milton Friedman would have told you. What we have seen is, first, we saw a liquidity effect in the bond yields. We saw when the ECB was announcing and starting to conduct quantitative easing, yields was pushed down because the ECB was buying bonds. But as this is having effect and growth is picking up, investors are increasingly saying this is a real deal. That also goes for households. And when I talk to people around in Europe these days, there is a real belief that we are beginning to see a real recovery, that we're moving away from deflation. If that's the case, what we're seeing now is a European positive demand shock. Thinking in terms of ASAD curves, the 8-day curve is shifting to the right. However, we're probably also seeing another thing, and that's probably why we're seeing oil prices up over the past week and why we are seeing stocks down. Because normally if you had a positive demand shock, you wouldn't see stocks going down, you would see stocks going up. So why are stocks going down? Well, a case might for this be is that we're also seeing a negative supply shock in combination with the positive demand shock. So the negative demand shock, what is that? Well, Saudi Arabia. I do think that the reshuffling in the Saudi government, the new appointment of a new crown prince, is a change in Saudi policy. One could be tempted to say that the Saudi-led OPEC price war on oil is over, and we've seen oil prices rise significantly. Obviously, for oil-producing countries, that's a positive demand shock, but for oil importing countries like the US and the Eurozone, that's a negative supply shock. So that might be a reason why we're seeing stocks declining, bond yields rising, and inflation expectation rising. Of course, the negative supply shock in itself should push up inflation expectations, but why are then 5-year yields going up? Because surely a negative supply shock like this is not a permanent shock. It's maybe increasing the price level, but it's not permanently year after year new inflation. So I'm not entirely sure that the oil price explains the 5-year inflation increase in Europe and the US, but it might explain why stocks are down. Obviously, it might all be just, this is just markets, it's jittery, blah, 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 I don't know. But this is an attempt of mine to think about what's going on in the markets right now. It's Friday night. I really should be with my wife, and the birds are singing. I think I'll have a beer now, and once I am free of my obligations in Danske Bank, I'm pretty sure I will do a little bit more on market commentary, also on the blog and in other forms. But so far, this is all you get. And let me hear if you think of this format, that I will do this from time to time. I'll not stop blogging. It's much more fun than looking at me. I'm not a very nice looking guy, and you have to style yourself slightly to be in front of a camera. You can write your blog pieces in your underwear, so don't think too much about that. But have a fantastic weekend, all of you. I might return soon. Bye.